Welcome in, everyone. I am the Crypto Bull God. Please do me a favor. Let me know if the audio is coming through because I have a little bit of a different setup as I had shared last week. So definitely want to make sure everyone can hear me because if you can't hear me, this live stream will be of no use to you. So I see Kyle's in the live stream. Nice to see you, Kyle. Maybe you can just drop me a comment and let me know that the audio is coming through. But excellent. So guys, I hope everyone's having a great pre-Christmas week here. Hopefully you're going to be enjoying some time with your friends and family, whatever holiday you celebrate. There's plenty of holidays around this Christmas time like Hanukkah and Christmas and a lot of different holidays. But I hope you're enjoying time with everyone. And if you wouldn't mind to help the channel out, I would appreciate a thumbs up. And feel free to drop by in the comments and share any thoughts you have about really anything in particular regarding the market. I made a decision earlier this morning based upon the level of volatility that I was seeing that it would be important to come out here and have an agenda of some specific charts I wanted to go through. I think it's going to be a fairly quick live stream, but I think it's going to be a beneficial live stream. And the reason I believe it'll be a beneficial live stream, of course, all my live streams are beneficial, but I believe that this live stream in particular will be very beneficial because I'm going to tell you what I'm looking at, right? And if you trust my opinion, right, if you value my opinion, I'll give you a sense, honestly, what I'm looking at in the charts. I've been telling you guys for a while that if you're newer to the space and you're spending a lot of time reading news headlines and listening to news narratives, you're going to make a lot of emotional decisions in this market. A lot of people fail to understand, no matter how many times I've explained it. Hopefully everyone here hears this when I say it. Volatility exists both to the up and down side. You cannot expect to invest in a cryptocurrency asset in the most volatile market there is out there and have the opportunity to potentially get a 10x, a 20x, a 30x without significant downside volatility. Does that make sense? I mean, if you're invested in something, if you invest in a bond, what's your volatility? Like zero. Okay, you're gonna earn a fixed rate of return. It's just one of the most conservative things you could do, right? But if you're going to invest in an asset that historically demonstrates a tremendous amount of appreciation to the upside, and if you know what you're doing, you can capture that. You're also going to have a lot of downside risk. So it shouldn't come as a surprise that as we continue to move along, we're only in December. Remember, I believe the first quarter, I've been saying for a very long time now, I believe the first quarter is going to be epic. Okay? I don't use that word lightly. It's going to be fucking epic. Okay? I'll throw the F-bomb in there. Hopefully that further highlights it. But along the way, we're going to have a lot of curveballs and volatility, right? As you're already probably noticing, I don't know who else you guys watch. I'd actually be curious. Who else do you guys watch on YouTube, or who else do you follow on X or Twitter that you place a lot of value on? You're already finding, if you're paying really close attention to a lot of larger accounts, everyone's getting wrong calls, right? There is no technical analyst out there who's going to get every single move within the market correct. We're all going to get stuff wrong. There's just way too much unknown, right? Nobody's a Nostradamus. However, your more value-added technicians, you're going to find that they come out in environments like this and they remain very level-headed. And they know what charts to look at. They speak to things in a very unemotional, sensical way. And get you to pay attention to what's most pertinent in the market. And that's what I'm aiming to do today. Those are the individuals you want to be paying the most attention to. Juan says he bought up the dip. I don't have my bell on me, but ding, ding, ding. Let's fucking go. Guys, let's get into the charts here. Okay. There we go. I don't know why I keep getting those messages. Now, this is Bitcoin on the 12-hour. I removed all these moving averages. You guys know that we tend to look at the 12-hour a lot. There's a lot of historical significance in here. So you can see we've broken down below the 50 simple moving average, which we haven't done since October. Okay, we really need to regain the simple moving average. I mean, it's not coincidental that there's also an area of price confluence right at 98,400 that coincides with the moving average at 98,800. Okay, so the 98 to $100,000 psychological level, that's really going to be the key level that you're going to want to watch be reclaimed. Now, obviously, we can take that out. We can take that out. And just kind of focus on what's most important, which is reclaiming the $98,000 to $100,000 level. If we had to put a little bit of additional confluence on the chart just to give you an appreciation for other targets, looks like this area here at 10, we're going to call that 1038. That's another important area. Okay. And then obviously we have our all-time high. What is it? 108.4. 108.364. Okay. 108.3. We'll just call it 360. Okay. So, yeah, we want to get above those areas. Now that we've lost the 50 simple moving average, obviously the other thing we want to do is we want to try to determine where price could bottom. And there's a couple different ways that you could do this. Okay, now keep in mind, we're on a more granular level of a view here. The market, by the way, the market has turned around significantly. Who knows how it's going to print by end of day today, but we saw a lot of red in the market today. And maybe we'll take a look at a few projects and see how they're doing. But a couple different ways you can determine price confluence here. Obviously, the most basic way, and I like to keep things stupid simple on this channel. It's a methodology that's worked for me, and I think it'll work for you as well if you institute one. There's really a range right here between 90,800 and 91,600. Again, in determining areas of price confluence, I'm not perverted. Yeah, hopefully I'm not perverted, but I'm also not performing any magic here. I'm just looking left. I'm looking for price confluence here, and I'm seeing that 90,800 to 91,650 is a key area of support. If I had to pick a lower range, if we lost that, I don't want to muddy up the waters too much. I would say as low as 87. Okay, I could put another area of price confluence in here around 88, 89, but for the sake of not having too many lines on here, we're going to keep it there. So one of the other things we can do, our bottom was right here. So another thing that we could do is take a look at how far we've retraced down. And as you can see, this is just an approximation. So you guys know once in a while we take a look at fib retracement levels. This is another way you can determine where prices may bounce at. Now, in an extremely, here is my opinion on this. In an extremely strong uptrend, as much as, we talked a lot about the golden pocket, right? The 0.618 all the way down here at 66,000. There's even a 0.5 fib retracement at the $73,000 level. On as strong a move as we're seeing right now, I would expect price not to retrace too deeply, right? So I'd first be targeting, it looks like we have this 0.236 fib retracement level around 89,950. Now, again, I haven't drawn this exactly, so we'll call it the $89,000 to $90,000 range. So that's another point. It's another data point which adds confluence to this area. Ideally, I'd really like to see this $90,000. You guys know this. Round $10,000 digits are psychological levels, right? So $90,000 is also going to be a psychological level, on top of it being a fib retracement level, on top of it being an area of price confluence. Now, if we start to lose $90,000, we could dip all the way down here to $88,000, $89,000, $87,000, $88,000. But again, you got to ask yourself another question here, which is, how deep of a retracement are we currently seeing? Guys, we're seeing a 15% move to the downside. Keep in mind, I'm not saying that the move to the downside is completed here, but we have spent some time, and maybe we can take a quick look at this. In the past, when we've been in these really mega bull runs, I think it's a mixture of people not doing their homework and not studying the facts in the charts, or people have short-term memory, as they say. We typically see corrections as we're extending on the upside, as we're going to the upside. We have historically seen corrections as deep as in the 30% range. So we're only at a 15% correction. Am I saying we're going to... Did I just make the statement that we could go down? No, I don't believe we're going to go down 30%. We have to be prepared for the possibility, but no, I don't believe that's the case. What we could see is maybe us bottom out somewhere around here at, maybe a 17% correction. Who knows? Maybe we've bottomed, but that's what I'd be looking for. Now, if we go into... No idea why that keeps happening. If we go into a 3-day chart, we haven't looked at a 3-day chart in a while. And the 3-day chart has a lot of value in it because you can get a few clues as to what to expect for potential retracements. As you can see, there aren't many times, I'm kind of highlighting them here. We took a look at this, how many fake outs and how many bullish indicators took place once the 20 simple moving average, orange line, crossed above the 50 simple moving average, purple line, as both moving average lines were extending up. Got a dog in the background. All right. May have to... Hey! Thank you. So we may have a barking dog in the background. These are some of the things that I have to deal with when I'm traveling. So, anyway, what we can see here is we have a move to the upside. The 20 simple moving average is crossing above the 50 simple moving average, and every time that's happened, I think it's like 8 nights of the time, 8 out of 9 occurrences, like a 90% or less probability, 89% probability, we'll have a significant move up. Guys, we haven't had a significant move up yet. Okay? We've had a nice move up, but we haven't had a significant move. Let's go back to 17. Now, again, I've made the inference that a lot of the price action going on today looks a lot more similar to 2017 than 2021. Okay? So, 16-17 looks more similar to today than 2021. In this case, once we got a cross here, you see the cross was right here. We had price action. Look what happened here, guys. Now, again, Bitcoin was a less mature asset. When you're less mature, what does that mean? You have less price data. It also means you have a smaller market cap. And because you have a smaller market cap, there's a higher degree of volatility, what we talked about in the beginning of the live stream. So you have with a higher level of volatility, you have more upside potential, but more downside risk because volatility extends both to the up and downside. Hey, it's snowing out here. It looks pretty nice. I bought a cigar, guys. I bought a cigar, and I don't know if I'm going to wait until Christmas. I might smoke it today. I might just decide. It's fucking Friday. And I might have myself a cigar. So, anyway. Gotta love it. Hey, Tucker! Would you like to go in your cage? Alright. So, as you can see here, would you guys like Tucker to come on the live stream? Maybe I can put the video on. You can see a little tuck. No, we don't want Tucker. Tucker's going to go in the cage if he barks again. You're going to have to excuse me for a moment. But anyway. As you can see here, let's take a look at what has happened in the past. Well, as you can see, when we got the positive cross, we came all the way below the 20 simple moving average. Remember what I said just a few moments ago? 34% correction. Here, I mean, this was from January 17. This was in January 17. This move here was only 2 months later, and look what happened. Look at this level of volatility. We had another 34% move to the downside. This time, because the moving averages were a lot closer together, price action actually fell all the way to the 50 simple moving average, right? Now again, if you had gotten panicked, if you started reading news headlines and you started clicking on the clickbait fear porn on YouTube, because let's all just face it, these influencers put up the creative thumbnails that I don't spend time putting together to get your attention. You're all emotionally bent out of shape. You watch the video and you find out the video is useless. It doesn't provide you with anything relevant, and it adds no value. So if you had been feeding into your emotions, you might have gotten weeded out when Bitcoin was at $1,000, when Bitcoin was at $800, okay? Bitcoin went on to run up, as we know, to 19,700. So, and you can see the level of volatility here all the way up. Look at this volatility. Another 30% move to the downside, okay? One more big move to the downside here. So, and then this was a bigger one. This was 42%, okay, before the crescendo. Caspa? Before the crescendo, all the way up to the upside here. So a couple things I would take away from this chart. Two things, okay? Two things I want you to walk away with. Number one, once we've had that bullish 20 moving average cross above the 50, we've seen these 30 to 40% corrections, okay? Point number two is, when we've moved above these moving averages like a magnet, okay, like a magnet, these moving averages have made price gravitate back to their average value. That's the way really to think about it, guys. Don't overcomplicate it. What is a moving average? A moving average is just an average of the price on the chart. So what happens is price gets overextended to the upside, and naturally, I love numbers. Naturally, what likes to happen is price likes to gravitate right towards its average. It gets a little overextended, it gravitates towards the average. It gets really overextended, and then you have a larger correction. So that's all that's going on in the chart. Now, how can we take that and extrapolate it to current times? Well, I'll share my thoughts on that. So right now, as you can see, price is pretty overextended relative to the 20 simple moving average. Okay, this candlestick is set to print on Sunday. Okay, so it wouldn't surprise me if maybe we see a lower high here and prices roll over down to this area, which would coincide with the 20 simple moving average, right? I do not think we're going to come all the way down to the 50. All right, we kind of gravitate towards that average price action, and then we start to move right back up in the January timeframe. Okay. So there isn't anything super concerning going on in this chart. I think what this chart helps us to do is contextualize what's going on in the market, right? Notice how I'm fundamentally going through these charts and unemotionally, unbiasedly, objectively evaluating what's going on. That's what you guys need to do. You can't pay attention to all these headlines. The Federal Reserve is not causing these moves. The charts are causing the moves. Okay, this isn't Jerome Powell comes out, makes a bunch of statements, and now the entire market's going to go in a different direction. If you believe that, you're entitled to your opinion. If you believe that, then you are what's called part of the herd. Okay, you are part of the herd. Let's take a look at the 50 simple moving 50 simple moving average. Let's take a look at the Bitcoin weekly chart. What do we got here? Great. So we got all these moving averages moving in the right way here. Awesome. So we're above all these moving averages. Let's look at the price indicators. Okay. I want to focus on one price indicator. Can anyone take a guess what price indicator I'm gonna take a look at? I'm gonna take a look at the comments here. Of these three price indicators, the MACD, the RSI, and the stochastic RSI, let's take this nupple off. Nupple sounds like nipple, guys. Just an FYI. Of these three indicators on the weekly chart, what do you think I'm going to speak to? Let me see who's in the comments here. Evan, it's very nice to see you. You've got to be... Evan, I got to tell you, man, XRP looks very strong. I am a little surprised and very impressed with the amount of strength in the chart. So again, $5 to $7 is my cyclical top target. $10 would certainly exceed my expectations. There's enough TA people out there who I respect calling for the possibility of a $10 XRP. I wouldn't rule it out. But anything at $5 and above, I'd be a seller. But chart looks strong. It could easily pull a 2, 3, even maybe a 4x from here. So we'll see. Looking good. Josh, let's fucking go. Welcome in. It's always nice to see you. Juan, the Crocolisk indicator. Okay, I'm going to move on and tell you one indicator because I don't even know what you just said, Juan. Appreciate Evan. I know it's difficult for you not to blow up the chart. And I do appreciate you. It's Friday and I'm debating if I should drink tonight. Have a cigar with me, Evan. Do you smoke at all? Have a cigar. Or if you smoke anything else, feel free to do that as well. No judgment here. Okay. I'm not much of a smoker. I don't know if you guys could tell that. You know, I live the healthy lifestyle. Not gonna say I haven't had an edible. I'm not gonna say I haven't had any brownies, but no, I tend to live a healthier lifestyle. But anyway, as he smokes a cigar this evening, it's the RSI, guys. It's the RSI. So what do you think I'm going to talk about on the RSI here? Now, historically, what we've done, if we go back to this time period here, this is really interesting. This entire block of time right here Bitcoin was going on its huge bull run. I want you to note where the RSI is. This line right here, and I'm going to make it a little bit more defined so it's easy to see on your phone or on your computer. Okay. So then, actually, I don't like that. That's good. So you see that dotted line that I've drawn there? That represents the 70 on the relative strength index. And, you know, that's a key area that we've spent a lot of time talking about on this channel, that historically when you look at a weekly chart, and it is very applicable to other charts we're going to take a look at actually, but when your relative strength index gets above 70 on a lot of these charts, that's when you start to see some of those huge major moves, like XRP. If you took a look at the XRP chart, I think the RSI is all the way up in the 80 region. It started to have an explosive move, really, once that RSI started to exceed 70. Now, ideally, what we'd like to see is us stay above 70. Again, very immature asset. So we saw these breaks of 70, which were all fake outs until the blow off top here. But these were all fake outs, which all ended up with RSIs ultimately bouncing and getting back above 70. So a couple thoughts here. Number one, the asset is more mature, so to some degree you're going to have less volatility to the downside, just like you're going to have more volatility to the upside. However, with that being said, one thing we can do, we can mark a historical area on the chart from 2017 and say, okay, well, even when we broke 70, we were able to bounce around 54. And if we come back to current times, you can actually see we broke below 54. We actually fell right. We double bottomed right here. But you can see now that we've regained 70, we're still holding 70 at the moment. We'll have to see. I mean, technically, I think we're slightly below 70 on the RSI. Where are we at? Yeah, we're at 69. Ooh, 69. We're at 69. But ultimately, if we break 70, which I wouldn't like to see, but if we did, we can potentially chalk it up to volatility, but we'd really want to see this 54 level hold. I really wouldn't want to come back all the way down to 44 here. So, but that's the main thing I'm looking at. It'll be interesting to see how this candlestick prints. You can see we've had a lot of wicks to the downside, spelling out seller exhaustion and buyers stepped in. Ideally, we don't want to see a bearish engulfing candle here. In order to avoid a bearish engulfing candle, we would need the red to not eclipse the green body here. In other words, we'd have to close higher than where we opened this prior week. So we'd want to see us get up to 101,200. So if we can make a 5% move up before the end of the week here in a couple days, we'll avoid that. If not, you got a bearish engulfing candle, so it could be a sign that we're just going to sputter around here for a few weeks and potentially go a little lower before we get our make our way out here. If we go to a 2-week, I didn't pull this chart up ahead of time, and I did want to take a look at it with you guys. Okay, a lot of noise on this chart. I'm not going to rehash what we looked at on this chart before. If you were here for that live stream, you probably remember this. On the 2-week, the stochastic RSI is in great shape. MACD's looks good. It's curling up. Let's take a look at the RSI. Look at this RSI. We broke the declining area of resistance here. We came back above the upsloping line, and we're back above 70. Things are looking good on the 2-week, so nothing to fret about there. And the 2-week candlestick, actually the 2-week candlestick doesn't close until over a week from now, 2 Sundays from now. So we still have a lot of time for price action to pan out here. Bitcoin dominance. Okay, let's have a little conversation here about what's going on. We had the rising wedge. Let's put this on a 2-week. We had the rising wedge. The rising wedge broke. I said, guys, when you have a chart formation break, this area was the home for Bitcoin dominance. And once we broke structure, it wants to go back home. But we don't want it to come back home. We kicked it out. So chances are, even though it's trying to show us the chart some love here, it's not going to last. However, because we re-entered on a weekly here, we've re-entered the formation. If we close above this line here, I'm anticipating the possibility that we could come all the way up to 60.5, the 60.5 area, perhaps as high as 62. If we actually go to the past, how am I coming up with this? 60.5 is an area of price confluence, but how am I coming up with 62 in particular? Well, interestingly enough, if we go back to the past, you can see as Bitcoin dominance in 2020 was breaking to the downside, we had one final flush up that took us a little bit above prior all-time highs here, so that's why I'm saying 62. Did we get the same thing in 17 was a little bit different. So it's a possibility. And the other thing I recognize is we broke market structure within this formation. A confirmation would be continuation to the downside. Now that we've re-entered the formation, what happens is it increases the likelihood we could retest the top of this channel here. So don't rule it out that we're not going to see another rise in dominance here. Now, all that means is that your altcoins are not outperforming Bitcoin in generalities, in total. It doesn't mean that Bitcoin isn't moving up. It doesn't mean that altcoins aren't moving up. It just means Bitcoin will be outperforming. But again, ultimately, what we're looking for here, we're looking for this thing to continue to ultimately roll over here. I believe dominance is going to be... Dominance may very well hit a new all-time low. I don't think this trend line is going to hold. We've talked about that. We could come down to the 35% or below. So that's my own opinion. I want to go to total others first, actually. Total others is everything outside of the top 10. Let's go to a monthly. Okay. Posted this out here for you guys following me on X. I posted something pretty bold. This is an ugly candlestick. Ugly. And I said at Pico Fear this morning that I would venture to guess that before the end of the month in 11 days, we'll be up at least 23%, right around 23%. And the candlestick will close green. Let's see how much progress we've made. So far, from the point of my post, we've gone up. Let's go for the bottom here. We've already gone up 16%. Okay? In order for this month to close green in 11 days, all we need is for total others to move up approximately another 9%. So, again, there are so much volatility. If we put this on a daily, take a look at this level of volatility. We had a straight, keep in mind, this is actually a really good perspective, guys. From November 5th all the way up until December 7th. So for 1 month, we had nothing but up. Now, we're getting a little bit of a correction. That's fine. We should anticipate that at some point we're going to see a strong bounce to the upside because we're in a macro bull market. Don't confuse bearish short-term price action for a bear market. Bearish price action, consolidation, things getting a little too overextended, they occur in bull markets. I think some people have it in their head implicitly, whether they acknowledge it or not, that a bull market means this. No, a bull market is more like this. Okay? You're going to have ups and downs along the way, right? We have spent, if you guys, I'm curious, drop a comment, actually. I want to know this. Who has been following this live stream fairly consistently? Because, I mean, I understand. Everybody here has lives. It's not like you can come out here every day. You know, like Juan. Juan is my guy. He's been my #1 supporter lately. Todd, you know, I can name a bunch of different people. Josh is very consistent as well. But anyway, drop me a comment if you've been fairly consistent in watching the live stream since, say, I don't know, 2022. So a couple years now. 2022, 23, 24. I'd be curious who, who of my subscriber base has been around me for that long. And the reason I bring that up is because if you've been really paying attention to a lot of the content that I produce, there's a lot of consistency in what I speak to. And one of the points of consistency that I often speak to is the level of volatility that has historically taken place in all these charts. We have spent a lot of time going back in history and taking a look at corrections that occur within this market. And what we recognize by objectively evaluating that is that in an uptrend, there are big pullbacks because there's this thing called volatility, which plays out both to the up and downside. So, again, nothing macro has broken down here, guys. Like, when we look at this chart, when you actually zoom out, let's do something a little different. Let's look at a 3-month chart. Now, when we look at a 3-month chart, you tell me, are you really concerned about price action at the moment? Now, keep in mind, these lines here, maybe I'll just take them off. This was drawn on a monthly chart. Are you concerned about price action right now when you're looking at this chart? I would think not. We've literally tapped the top of our all-time high from 2021, guys. Guys, here's something crazy to think about, all right? To contextualize. Contextualize is the word of the day, apparently. I don't know why. You ever get a word stuck in your head and then you just keep using it? Contextualize. Contextualize. And then what happens is if you say the word too many times, contextualize. It sounds like a funny word. It doesn't make any sense anymore. I don't know. Maybe that's just me. What was I saying? Oh, hey. I want you to think about this. Right now, with where we're at the blow-off top from 2021. Okay? Not even the blow-off top. It was really a corrective structure. Whatever. The all-time high. Altcoins, I want you to listen very carefully to what I'm about to say. Altcoins have not made their biggest moves, most of them, right? I have given the opinion that when XRP went from 50 cents to 275, that's the largest move it's going to see. It's not going to make a larger move than that from 275. But for many of your altcoins, most of them, in fact, the biggest moves have not occurred yet. And we're already at the highest price we've ever been within Total Others. Just want you to really think about that. Total 3, again, when we zoom out on the monthly, I want to ask you, look at this, okay? The RSI on the monthly for Total, this is everything, right? The entire market, we're above 70. We kind of peeked our head here and then had a little fake out. Last time in 21, we all know what happened. 2017, we all know what happened. We're back above 70. I'm going to tell you what I'm anticipating for this chart. First off, I'm anticipating we're going to stay above 70. Maybe we bounce right at 70. And then I'm expecting a big run up here. Just like we saw back here, and just like we saw back here. We're nowhere near the top of this market. That sounds crazy to say. But it's just the truth using the data. The data is telling us that we're nowhere near the top. Okay? That's what the data is telling us. Emotionally, you may feel differently than that, but I'm just telling you what the data is saying. Again, let's let these 11 days play out. But the formation of this monthly candlestick will most likely be green. We'll have to see. What else did I want to look at? Ethereum. Come on, guys. How many times have we said this? Resistance, 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 flipping into support. Nothing to see here. Caspa. Now, ideally, we would have held 14 cents. I do not like that we lost 14 cents, right? So the question we have to ask ourselves is, did we get some sort of a deviation and fake out to the downside below 14 cents, and are we going to recapture it? Or are we going to start heading towards 10 cents? I told you guys about 10 cents. I said, point blank, if we come down to 10 cents, we have a high probability of breaking it. I don't want to go to 10 cents. I want to know this thing has bottomed. I want to reclaim the 12 cents, and I want to shoot right back above 14 cents. It's uneasy being down here. Am I mega bullish? Guys, the reason I'm talking about this chart, it's the largest altcoin holding that I have. And I have a lot of people who follow my content who love Caspa. So I'm going to update everyone on Caspa. But I'm always going to be 100% honest with you. I do not like that we're down here. I do not want to see us at 10 cents. If we're at 10 cents, we have a higher probability of breaking that area of price confluence than retaining it. Okay? Holding it. So we want to get back above this 14 cent area. Well, I think my family's coming back home, and that's probably going to be my cue to end the live stream. So, guys, I hope you appreciated the quick update. I'll try to get a few live streams out here and there just to keep you current and abreast of developments within the market. But I hope everybody's enjoying time with their family. For many of you, I honestly think the best thing you can do is just tune out the charts for the next few weeks, because we're going to be a fuck ton higher by February. That's my view of the that's my honest assessment of the market. But I'll be here each step of the way, honestly telling you what I'm seeing within the markets and calling it like I see it. So let's all stay patient. Let's all keep those emotions in check. The biggest run is yet to be seen. We have not had a true massive alt season. We're still waiting for the massive alt season. Don't let the headlines weed you out. Don't let the big accounts on X, okay, weed you out. Stick to the charts. Stick to the facts. Everything cyclically from a macro perspective looks great, okay? We're just going to have some volatility along the way. Don't lose sight of that. All right, guys, until next time, let's all spread awareness and let's carry the education forward. Take care.